Dusk falls over Nairobi, signifying the end of yet another day of anxious watching of the shilling, a watch that has done nothing to allay the fears of Kenyans dependent on a strong shilling to enjoy the fruits of economic growth. Since January this year, the shilling has consistently performed poorly against both regional and major world currencies, losing 25% of its value to become the world's worst performing currency. This has in turn slowed down economic growth, translating into a high cost of living for the citizens of a country heavily dependent on imports.
Maize prices are twice the international price in Kenya. That's called a tax on the poor. It's a Robin Hood in reverse. We've got to look at these things and say to ourselves, how do we fix them and fix them?
An unenviable situation for any country, especially since for many observers, those charged with monitoring and regulating both the currency and inflation have several times been accused of laxity. Despite the alarming drop that just last week saw the shilling hit a historical low of 104 shillings to the dollar and inflation rise to 17.3% in September.
But I think what happened at the central bank was they bet on the rains. The rains didn't come, inflation went higher, food prices rose, fuel prices rose, and then I think the central bank also felt that if the rains came, and they still might come, right, then all these pressures would ease off.
And while the government had previously been conspicuously silent on the matter, last week also saw both the President and Prime Minister issue directives to the effect that something must be done. But what exactly can be done?
I think, our messaging hasn't been very good, so we've got to improve our messaging. We've got to have more coordination amongst our policymakers. There is nothing wrong in not being adversarial and trying to bring everybody on board in the policy that we're conducting.
Though widely known as East Africa's economic powerhouse, the Kenyan economy is in trouble. Even the facade of a peaceful city going to sleep cannot hide the fact that high inflation and a weak shilling are forcing Kenyans to make difficult decisions.
How do we adjust in such situations? Well, that you've got to always trim your spending to suit the times.
Easier said than done when the country's imports have grown faster than exports. Even so, analysts remain confident that the economy will improve in the coming months, optimism that is largely pegged on the ongoing rains, which are expected to ease pressure on food prices, increasing disposable income that in the short term can be used to boost the flagging economy. Wanjiru Gaitho, Citizen Live at 9.